Hey everyone, welcome back to Upside Down Data. So today has certainly been an interesting day in the markets. I think one of the things that's gotten the most attention today is this move by the Bank of England to start buying bonds, basically to be the backstop to the market, given all the bloodbath basically that's been happening in the British bond market. And I've heard that part of the reason why the Bank of England likely did this was that some pension funds were possibly nearing insolvency, which would have been a huge fiasco if that had been allowed to just go on, without any response. So basically, then the Central Bank of England, while they're raising interest rates to try to fight inflation, has actually turned back on the quantitative easing spigot. And this has gotten a lot of people talking, right? So one of the things that I've seen, a sentiment I've seen a lot on crypto Twitter recently is, this is coming to a central bank near you. Basically, this idea that, Bank of England was the first to blink first, the first central bank to blink first, but that other ones are going to follow suit and going to have to take their, foot off the brake, going to have to dial back their financial tightening in the face of what's going on in the bond market, just the bloodbath that have been happening kind of across different countries. The bond market's not doing so well. Now, for me personally, that's not my base case that the Fed is just going to immediately pivot here. A lot of people are saying that this means that the Fed pivot, is right around the corner. I'm not so quick to jump to that conclusion. I mean, one thing that is a stark difference is that, with the pound, with the Bank of England, they're dealing with a currency that was falling off of a cliff. I mean, these are insane moves to be happening in a forex market. It's just crazy moves that have been happening. The pound weakening horribly, and then that also, catastrophic things going on in the bond market, etc. I don't think the Fed is at that position yet, but certainly everything is under a lot of strain. And so what I want to talk about today is, even though that's not my base case that the Fed is just going to immediately pivot, I did think it'd be an interesting thought experiment to say, okay, let's say the Fed did pivot. Let's just kind of entertain that thought. What a lot of people think is that that's going to be this kind of amazing move or amazing occurrence for crypto. I want to talk about that a little bit more, see if there's any historical analogs we can look at to get an idea about how different assets have reacted or what has happened when the Fed has stopped hiking rates or even gone to cutting interest rates while inflation was still high, like where we are right now. So go ahead and talk about this. So with this chart here, what I'm showing you here is the inflation rate in the US year over year. So this is the CPI headline print. And what I had just taken away there, what I had overlaid, was the Fed funds rate. So this is, basically the interest rate. And so obviously, the Fed has been hiking more recently. And so what I wanted to do is just go back and look, historically, when's the last time we can find where there was a notable discrepancy between CPI, moving to the upside or being high, while the Fed was actually cutting interest rates, was actually, going into the more softening or kind of easing of financial conditions instead of tightening like they are right now. And the closest that I could find, the one that seemed to kind of be the best analog that I could find, was actually back here in 2008. You can see the Fed had already reversed from this hiking cycle it had been in going into 2006. They had paused throughout 2007 more or less, and then kind of mid 2007 going into 2008 they started cutting, and inflation went up to a new peak. It set a new high for that kind of cycle, even above the peak back in 2005, but yet the Fed was remaining to cut. Now, obviously, we all know this is a pretty extreme event. This was, right before the great financial crisis. If I put, not to make things too busy, but if I just put the S&P 500 chart, in the background here in this teal color, that spike in inflation happened right before the kind of the floor fell out, and the market just tanked absolutely. Just had a massive move to the downside. So in some reasons, the Fed having moved down even in the face of this inflation makes sense given what was coming. And I think this is interesting, because this is, I think, what also a lot of people are talking about right now is what they expect, us going to these really high inflation rates, even higher than what happened back here. The Fed, having tightening, although in this case, the argument we that they're tightening into this weakness here, they had already kind of tightened a while before, stopped, and then the big crash came after. But it's a similar kind of idea. The Fed stopping now and starting to ease financial conditions would be, the last time that something like that happened in a notable way was back in 2008. So let's talk about what has happened with some other markets then during this. So obviously we're just looking right now at the stock market. We know that that fell off a cliff. Let's look at a different asset and see what was going on. And I wanted to look at gold. And gold is an interesting asset, I think, if we're thinking about crypto for a couple of reasons. There's obviously the very tortured kind of analogy or comparison of Bitcoin being digital gold. Obviously, that's a bit tortured because they are different assets. Gold has millennia of trust in it being a valuable asset, of it being used as money. Whereas, of course, Bitcoin has only existed for a bit over a decade, so it doesn't have that same property. But still, it's thought of, at least by some people, it's thought of as supposed to have similar properties between Bitcoin and gold. Limited supply, supposed to, theoretically be an inflation hedge, although really neither gold nor crypto has really acted like that in more recent history. But it's because gold was around for this and crypto wasn't. It's one that I'm just going to look and see what happened. And so there's some interesting things that we can see on the gold chart during this time. So here we are back, in 2008, going into that crash. I'll throw up the S&P 500 so you can get a comparison of what was going on between them. What's notable here, when you look at what gold was doing during the Great Financial Crisis, is that it did have a move down with the stock market at first, right? You can see that happening very clearly here at first. I take this away and just measure the size of this move from the kind of top here in March 2008 going down here to the bottom. It was about a 33% move to the downside that happened in that time. But then, of course, we know that gold then ripped to the upside, going up 177, 180-ish, percent to the upside. And it did that while the S&P 500 wasn't even able to get back to its high before, falling off into that massive bear market, that massive crash that we saw. So gold performed pretty well in that environment. Now, obviously, there's a lot that happened in this time frame that makes it a little bit hard to compare to just the mere possibility of the Fed pivoting, because this is assuming a massive market crash will follow. We don't really know if that's the case. But certainly you see an asset like gold, this kind of scarce asset, did fairly well through this time, even though there was some shorter term kind of pain that it experienced. But what I'm kind of wondering with crypto then is that, certainly this could be possible. And it would actually be, I think, really interesting if this is the way that crypto behaved. If we did see a lot more pain in the stock market, that the correlation between crypto or Bitcoin, for example, and S&P 500, would it behave the same as gold in this scenario where it would actually bottom before the market bottomed and actually not experiences as much pain as the stock market did? I mean, we've already experienced way more pain in Bitcoin, but I think the question would be, if we did have that final leg down, would Bitcoin already have made most of its move like back what gold did back here, or a heck of a lot more pain have to come? Open questions. It's not really my base case that Bitcoin would hold up extremely well, but it could. And if it did, that would be really interesting and suggest that Bitcoin might start to be seen in a little bit different way. But what I actually think is the more interesting thought experiment is, instead of thinking about, are we going into a massive crash like what happened back here, which is really hard to know, is just to think, one step before then, if the Fed, pivots while inflation is running hot. So, take this away here again. If the Fed were to pivot while inflation is running hot, what might that mean for crypto or just other risk assets generally? Well, one thing that would probably happen, is that the dollar wrecking ball would stop. So, the dollar's been going parabolic, ever since inflation started becoming a big problem, just really strengthening against other currencies. If the Fed pivots, starts going back into quantitative easing mode, this is probably over. And we know that when the dollar is falling, that is green light for risk assets like crypto. And so from that perspective, you might expect crypto to rally. There's also just kind of logical reasons why you might expect an asset like crypto or gold, or really any kind of hard asset, to do well in that type of environment. Because what it would mean, if the Fed did pivot here while inflation is this hot, it would be a capitulation on the Fed's part. They'd basically be giving up on going all out to tame inflation. They'd basically be accepting a higher level of inflation as being kind of the baseline. And what that would mean then is that anyone who wants their money to hold its value, you can't really just stay sitting in dollars, because that's not bearing you any yield. You got to do something with it to get some kind of yield. And so maybe what you do is, instead of sticking with this really inflationary asset, which would become the dollar in that kind of a context, you go into something like gold or crypto. So, the inflation hedge kind of quote unquote play for crypto hasn't played out through here, But part of what's been going on through here is that the Fed has been reacting very strongly. I mean, they were just late to the party, but more recently they've been reacting really strongly, sucking a lot of liquidity out of markets, really doing it whatever they can to try to bring inflation down. And that has not been a particularly good environment for crypto. But an environment where the Fed capitulates and just lets inflation run hot, that might actually be the environment where that inflation hedge behavior comes out. Because again, if the dollar is inflating by, let's say, 6% per year or something like that, then suddenly Bitcoin looks a lot more favorable with its fixed inflation rate that's going to be decreasing over time. Frankly, something like gold would also probably look quite favorable in that kind of environment also. And so for that inflation hedge narrative to really play out, it might actually require that type of environment, which we really haven't seen much before, except for this case where we're about to go into a massive recession. Because in history, the Fed has usually been quite responsive to inflation. But if we got into an environment where suddenly they weren't anymore, in some ways we're kind of entering a little bit of new territory there. And it would make sense that scarce assets like gold and crypto might do especially well because those have fixed inflation. They're not just going to go running away like, the US dollar would tank, etc. Now, obviously in that type of world, it's an open question of how sustainable that could be before we might just end up getting some massive calamity anyway. I think that's an open question. But so that analog to the Great Recession, maybe that's not such a ridiculous thing to be thinking about. Who knows? But certainly, before something like that might happen, it would be very reasonable for there to be a big bull run in those assets. And so I think that's partly why so many people are looking for this Fed pivot, because, in some ways, it might actually be the case that the Fed pivoting would be even more rocket fuel for risk assets at high inflation than low inflation, because again, people will just be looking for anything to kind of backstop their money. They're not going to want to just sit in this inflationary asset when the central bank shows no intention of trying to bring things back in balance. That's just my thinking of it. I'd be curious in the comments to hear if you have a different thought about how things would play out in that type of situation. But the element of Bitcoin being this kind of fixed inflation asset seems to be like it would be the most salient in an environment where the Fed has capitulated, letting inflation just run hot with no signs of them trying to do anything about it for an extended period of time. Could be that immense rocket fuel. But again, as I said at the onset here, it's not my base case that the Fed is likely to just do that, right? Just because we've seen the Bank of England, have to blink in the face of extreme events, things haven't gotten bad enough yet in the U.S. markets for that to force the Fed's hand necessarily. And it's also a little bit of a question of how bad would things even need to get for the Fed to blink. Jerome Powell, I think, is pretty set on not being, going down in history as the person who let inflation run away like what happened in the 70s. And so, I still kind of am of the mindset that it's more likely the Fed's going to go too far in the tightening side than them kind of give up too early. But of course, anything could happen. And if we do get this extreme kind of events like what, potentially is going to happen with the British bond market, who knows? Anything is possible. I just wanted to make this video kind of throw out those thought, experiments, right? Because this is really untested water for Bitcoin. It's never experienced anything like this in its history. And so we really have no idea how it would behave in those types of scenarios. We all have our theories, right? Some people just think it's just going to follow stocks in lockstep. Other people think it's going to decouple earlier. But we really don't know, especially in that kind of historically what would be very unusual behavior of the Fed capitulating while inflation's really red hot. Who knows? That could be the precise moment that Bitcoin needs to really kind of shoot off to the upside. Again, not my base case, but something that's interesting to think about. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there.